All right, today we're going to tackle a financial headline that just seems to defy logic. We're looking at the pharmaceutical giant AbbVie, and we're going to figure out how they managed to pull off a real head-scratcher of a quarter. So, here's the mystery we're diving into. It's a total paradox, right? The company is selling more stuff, bringing in more cash, but its actual profit at the end of the day has practically vanished. I mean, how is that even possible? Well, stick with me because the answer tells you a lot about how big companies think and the stories hidden inside the numbers. Just let that number sink in for a second. A drop of 88.6%. This is the official by-the-books decline in AbbVie's earnings per share. This isn't just a small dip. It's like falling off a cliff. And it's the kind of number that would normally have investors running for the hills.
Okay, so let's start where most people do, with the big top-line numbers that grab all the headlines. And this is exactly where things start to feel, well, a little weird.
See, on the one hand, everything looks amazing. In just one quarter, AbbVie brought in nearly $16 billion in revenue. That's a 9.1% jump from last year, which is really healthy. The business is growing, they're selling more. So far, so good.
And then, boom, you see this. The net earnings, the actual profit after you pay all the bills, it completely cratered. It went from over $1.5 billion last year all the way down to just $186 million. So you have to ask, where on earth did all that money go? To solve this one, we're going to have to put on our detective hats. We've got to go past the headlines and actually follow the money. And the first place we're going to look is the company's official income statement. That's where the real story is. Okay, let's break this down. Right at the top, you've got net revenues, up nicely, just like we saw. The cost to make their products is up a little, which makes sense, right? More sales, more costs. Selling and marketing costs are actually down. That's great. Their regular R&D spending is up, but nothing crazy. It all looks pretty normal until you get to this one giant line item. And here it is, the smoking gun. A single expense for $2.68 billion. Now, just for perspective, in the same quarter last year, this expense was only $82 million. This one number right here is the culprit that wiped out pretty much all of the company's profit. So what the heck is acquired IP R&D and milestones? I know it sounds super technical, but it's actually pretty simple. IP R&D just means in-process research and development. It's the money a company spends to buy another company's research, usually for a promising new drug that isn't even on the market yet. Think of it as investing in a future product before it's even finished. All right, so now we know what tanked the profit. But the bigger question is why? Why would AbbVie spend billions of dollars on unfinished science projects? Well, the answer reveals this massive, high-stakes strategy that, honestly, is already working. Just listen to the CEO, Robert Michael. Despite that 90% profit plunge, he's talking about outstanding results and significant momentum. That does not sound like a CEO who's panicking, right? And this next slide shows you exactly why he's so confident. And this chart right here, this explains everything. For years, AbbVie's entire business was built on one monster drug, HUMIRA. But its patents expired, and now look, sales are in a free fall, down more than 55%. That is a gigantic hole to fill. But look at the other two bars. These newer drugs, SKYRIZI and RINVOQ, are absolutely exploding, growing at almost 47 and 35%. So here's the big takeaway. AbbVie's massive transition plan is actually working. Their new growth engine is firing on all cylinders. The money coming in from these new drugs isn't just plugging the hole left by HUMIRA, it's more than making up for it. From a sales point of view, this is a huge win. So how does this tie back to that crazy huge expense? Well, see, that $2.7 billion charge wasn't some mistake or an operational loss. It was a very deliberate strategic move. AbbVie is basically using its current cash to go shopping for the next SKYRIZI and RINVOQ. This is where the money went. It wasn't lost. It was invested. Nearly $2 billion for a company called Capstan Therapeutics and its cutting-edge therapy. Another $700 million to license a new cancer treatment. An entire company acquisition to get their hands on a new depression drug. AbbVie isn't just hoping to invent the next big thing in their own labs. They're going out and buying it. So let's reframe that scary headline. The company didn't lose billions because its main business is falling apart. No, it chose to take its profits and spend them on securing its future.
It's a massive bet on the next generation of blockbuster drugs. Okay, so this brings us to the final piece of the puzzle, and it's something you'll see with pretty much every big public company. They often give you two different ways of looking at their financial story. On one side, you have GAAP. That stands for Generally Accepted Accounting Principles. Think of these as the strict official rules. And under GAAP, that huge multi-billion-dollar investment is just another expense, which absolutely crushes your profit. But then you have the adjusted view. This is the story the company wants you to focus on, where they basically say, hey, look, that giant expense was a one-time thing. Let's pull it out and see how the actual day-to-day business is doing. So under the official GAAP rules, AbbVie earned just 10 cents per share for its stockholders. This is the number that gives you those terrifying 90% profit crash headlines. And look, it's technically true. But as we've seen, it is not the whole story. Because when you take out that massive R&D investment and a couple other unusual items, you get the company's adjusted earnings per share, $1.86. Now that's still down a little from last year, but it paints a much, much healthier picture of how the core business is actually performing. And if you want to know which version of the story AbbVie's own leadership believes, just look at what they did. They didn't panic. They actually raised their financial forecast for the rest of the year and announced a 5.5% dividend increase for their shareholders. You don't do those things if you think your company's in trouble. These are signs of massive confidence. So what started out as a really confusing headline turns out to be this fascinating high-stakes strategy. AbbVie is very aggressively taking the profits it's making today to go out and buy the potential blockbuster cures of tomorrow. So the big question is this a brilliant move to stay ahead in a viciously competitive industry, or is it a multi-billion-dollar gamble that still has to pay off? Well, that's what the market gets to decide.